The Southeast has been the hottest region of the country for several years now, driven by really strong migration trends. Tons of people are moving to the area, tons of businesses are moving to the area, and this has ignited the housing and rental markets across the entire region. But we are in a housing correction, and this correction is one in which different areas of the country are performing really differently. Today, I am going to dive into three major markets in the Southeast. We got Tampa, Florida, Dallas, Texas, and Atlanta, Georgia, to see what is going on in these areas and what real estate investing strategies might work well. Hey, what's up everyone? This is Dave from BiggerPockets, and before I get into this video, I want to just remind everyone that although I make these lists about great places to invest, finding the right place to invest in real estate is not just about which market has the best appreciation or rent growth. It's also about where you have the strongest team. Having a great agent, a great lender, a great property manager matters a lot. And if you need help finding a great team, BiggerPockets is here to help. Whether it's in one of the markets that we're talking about today or just in general, BiggerPockets has curated a list of investor-friendly real estate agents across the entire country, and you get matched with one entirely for free on BiggerPockets.com/agent. You can just type that in, BiggerPockets.com/agent, or we'll put the link in the description below. With no further ado, let's look into these three big southeastern markets and see their investing prospects as we work our way through the housing correction. Before we get into each individual market, let's just look at two indicators that show why these three markets in particular have great long-term potential. And those two things are population growth and economic stability. So I pulled two charts and I'm going to show you each one. So the first one shows population growth year over year. Basically, how quickly is the population of any of these markets changing? And on this chart, you're going to see four different lines. You're going to see Dallas, Fort Worth, you're going to see Atlanta, and you're going to see Tampa. So the three cities that we're talking about, but also the purple line is the national average. And the thing that stands out to me here is even though there are some fluctuations back in 2010 and during the pandemic, what you can see is that for all three of these markets, population growth is outpacing the national average every single year, pretty much. I mean, there are those fluctuations, but pretty much the trend is that these areas are growing faster than the rest of the country. And when it comes to investing in real estate or even buying a primary residence, the price of a property, the price of rent really just comes down to supply and demand. And when population is growing, that is a good indication that demand is going to be really strong. So I just want to show you that. That is one of the reasons I like these three markets. Next is the unemployment rate. Obviously, economic stability matters a lot if you're going to own rental properties, if you're going to buy property. You want the economy of the area that you're investing in to be growing. And the unemployment rate is a good proxy for that. There's a lot of different economic measurements we could talk about. I just want to show unemployment rate here because it's one of the simpler ones to understand. Again, we have four lines on this chart. You can see the unemployment rate for the entire US, which is the blue line. And what you can see here is that consistently, again, going back even pre-pandemic, the unemployment rate for these three markets is lower than it is in the rest of the United States, meaning that these markets, generally speaking, have better employment prospects than the country as a whole. Now, you might notice that Dallas here just a little bit at the end has ticked above the national average, but is still really low, but it is something to keep an eye on. So all three of these markets look strong when we benchmark them against the national average, but let's look at each one by one to see how they're doing. First up, we have Tampa. So the median sale price in Tampa right now is below the national average, but just so. It's like, hovering around 380,000. I think the national median is like 390,000 right now. So it's about the national average. And they have started to come down on a seasonally adjusted basis. But generally speaking, in the context of a housing correction, we are seeing relatively flat prices in Tampa. As you can see, over the last couple of months, they are down from their June peak, but they've flattened out. And a lot of indicators, which we're going to talk about in a minute, suggest that they might start growing again in a seasonal way. But the second thing you want to look at on this chart is not just where prices are in an absolute sense, but also the rate of change. You want to know, are they growing, what pace they're growing at, how quickly? And you can see from this green dotted line here that although it was growing above 30% in 2021, 2021, that growth rate has fallen all the way basically down to zero. So when you look at year over year price appreciation in Tampa, it's about flat. Not necessarily a bad thing, not necessarily a good thing, but it is a good thing to know if you are going to invest. What you need to look at next is a lead indicator to sort of get a sense of where things are heading next. And for me, one of my favorite lead indicators is inventory. And my other favorite lead indicator is new listings. These measure basically supply in the market. When we talked about population growth, we talked about wage growth and unemployment. That is a good measurement of demand. But we also need to know how many properties are for sale because, again, supply and demand is what dictates prices. And so what you can see here with the green line is inventory, which is basically the total number of houses that are for sale at any given point, has come back off of its pandemic lows. Like during the pandemic, almost every market in the country saw really, really low inventory, and that has gone back up, but it is still well below pre-pandemic levels, which is really important. It means that the market is by no means in free fall. If a market was in free fall, you would see inventory to be spiking up even further. What we actually see in Tampa is that inventory has gone up from its pandemic lows, but it is starting to fall again, which is unusual and suggests that the market may be stabilizing. Again, we don't know. I'm just showing like the data as it sits today when I'm recording this shows that the market might be stabilizing. The other thing to look at here is the blue line, which is new listings. It's the total number of homes that go up for sale in any given month. And what you can see, it is absolutely just fell off a cliff at some point in 2022, and it has stayed at that level. This is a national phenomenon as well. New listings are down. People just don't want to sell, and that does help stabilize the market. Again, supply and demand. If there is less supply, that can help offset less demand, even though there is higher interest rates, right? Interest rates went up, that pulls demand out of the market. But if people aren't selling, that offsets the reduced demand in the market. So that's what we're seeing in Tampa. Rent is sort of the same story. We're seeing it relatively flat here in Tampa, which is totally fine. And what happens in most years, rent grows 1%, 2%, 3%. We got used to in 2021, these crazy rent growth, but we're seeing is a normalization of rent growth in Tampa. The region is really big though. So like what I'm talking about here is on average. So I actually created this map to show you the cash flow prospects of different areas of the metro area. This map basically shows rent to price ratio. If you're not familiar with that, basically compares rent prices to purchase prices and helps give you an estimate of what cash flow is going to be. It's not precise. It's sort of a rough proxy for cash flow, but generally the higher the better. If you see something that's like 0.7, 0.8%, that's probably going to be an area that has some good cash flowing deals. If you see something 0.5 or below, probably not going to be very easy to find cash flow without doing heavy value add or something like that. What you can see from this market is that there are areas that offer good cash flow. I'm not super familiar with Tampa, so I don't know anything about these specific areas, but just looking at the numbers, what you can see is that some areas, of course, have low cash flow. Those are usually like the downtown areas, but some of the outskirts offer cash flow potential, and that's attractive for investors. So generally speaking, when we talk about Tampa, I really like the excellent population growth. It has a strong, diversified economy. A lot of businesses are moving to the Tampa area, and there are solid cash flow potential in a market that has really good long-term upside. So generally speaking, Tampa's a good one. If you listen to my podcast on the market, I think like the second or third episode we ever did, we had to pick a market that we thought was going to do well over the next few years, and I picked Tampa. So far so good, and I still believe I think it's going to be a good one. All right, our second market today is Dallas. Dallas metro sales prices, they actually tell a pretty similar story to Tampa. What you see here is that prices are relatively flat. They did peak again last summer, and they've stayed quite flat over the last couple of months, which compared to a lot of markets which are in declines due to the correction, this is actually a market that is very, very stable. Prices are right above the median average, but that's for the whole metro area. And as we're going to talk about in just a minute, the Dallas metro area is huge. And so there's different, some areas are really expensive, some are really cheap. That's true of most metros, but Dallas is particularly big. And again, similar to Tampa, we see that the growth rate year over year, that's the important one, in the Dallas-Fort Worth area has approached zero. When you look at inventory, again, our lead indicator, you see a similar pattern to Tampa, but actually more pronounced. Inventory is coming down even faster in Dallas than it was in Tampa, which to me indicates that as we enter the summer of 2023, it is going to be a competitive housing market for Dallas, Arlington, Fort Worth area because inventory just isn't anywhere near where it was pre-pandemic. Just look at this chart. Back in January of 2019, it was about 18,000, 19,000 homes for sale at any given point. Now we're at about 12,000. So it's about 50% lower than it was pre-pandemic. And yes, because higher interest rates, there's probably less demand, but it is really important, the supply side. There are only two factors here, supply and demand. And if supply is really low, that has huge implications for the housing market. When you look at rent, because, the Dallas area is basically three different cities, I wanted to just chart out how different rent is for different places here. So you can see Arlington is the lowest and Dallas is the highest, but all three of them experience a similar pattern. Unlike Tampa, where, rent was sort of flat, then went up, then flat. Look at this trajectory of rent in Dallas. It just continues to go up. And although it has flattened out over the last couple of months, just to look at the long-term trends here in Dallas is that rent has been going up. Now, I personally believe that rent is going to stop growing as quickly as it did for maybe a year or two, but I think these long-term trends do really bode well for the Dallas area. When you look at the rent to price ratio map that I've created, first of all, look at how big this area is. It goes all the way from Fort Worth to Dallas. And you can see that the opportunities for cash flow here really run the gamut, right? In North Dallas, for example, not a lot of cash flow. Those are really low rent to price ratios. If, for example, you look at the southeast of Fort Worth, though, there are really good cash flow opportunities. So it really depends what you're looking for as an investor. Like if you're looking for high appreciation or if you're looking for cash flow, you may want to choose different areas of the Dallas metro to focus on. And of course, having a good real estate agent can help you find that. All right, so that's what we got for Dallas, a really quick growing city. It's been growing for decades, and there's really no sign that Dallas is slowing down at all. Price growth is slowing down a bit, but that does mean that maybe that there's opportunities for you to buy. I think Dallas long-term potential super high. Our third and last market today is Atlanta. Again, we're seeing similar patterns in the Southeast, right? So again, it peaked back in June, and although Atlanta prices did fall on a seasonally adjusted basis for several months, they're actually up a little bit from where they bottomed out a couple months ago. Things might be volatile. I'm not saying they've necessarily bottomed out for like this entire market cycle, but there is showing signs of life as we head into the summer season where prices tend to tick back up again. So it'll be really interesting to see what happens in Atlanta, even though the growth rate, like our first two cities, has fallen to near zero. When we look at inventory, again, I think Atlanta has the most dramatic situation here. So again, what we're looking at is inventory way below pre-pandemic levels, and it has just been dropping like crazy over the last months, almost back towards where it was during the pandemic, which was super, super low. And so this is a really important dynamic to watch if you invest in Atlanta, because it suggests that it's going to be a really competitive market, and that could push prices back up. The other thing is, look at new listings here. Those are dropping as well. So there are strong indicators that supply is not going to recover anytime soon, and we are probably going to be in a seller's market in Atlanta again. When we look at rent, it is similar. It has flattened out over the last couple of months, but has not fallen at all. And it looks like rent is extremely stable in the Atlanta area. And when you go to look at the rent to price ratio, you can see that it really runs the gamut. There are parts of Atlanta that have strong cash flow potential. There are parts that have a really bad cash flow potential, but is really up for you and your real estate agent to figure out based on your strategy. There's often sort of this trade-off, right? Where you can get great cash flow, but it's in an area that probably doesn't appreciate as quickly. Other areas might appreciate faster, but don't offer as good cash flow. And there's often things in the middle. There's really no right or wrong answer. There are really just based on your personal preferences and your investing strategy. And so Atlanta generally offers that full spectrum of investing opportunities. Personally, I just want to say, I think Atlanta prices are going to go up this year. Other places, I'm not sure. They'll probably stay flat. I'm just going to go on record and make a guess and say that Atlanta is going to see year over year growth. That's just my opinion. But right now, the inventory levels and new listing numbers suggest that there's going to be a lot of competition. Competition tends to lead to price appreciation. That's what I'm seeing in Atlanta. So overall, these markets are seeing pretty similar trends. Housing prices are relatively flat, but growth rates have come down to near zero. Rents, which have gone up a lot over the last few years, are also flattening out. But the main thing that I think you should all be looking for is what's going on with inventory. It is low and declining in all of these markets. So this doesn't necessarily mean you'll see a strong seller's market or big appreciation per se, but it does provide stability at the worst, right? Like when you compare this to other markets during the correction, like Austin, for example, these areas are going to hold up really well because inventory is relatively low. Whereas in a city like Boise, inventory is skyrocketing, and that makes a lot more risk in those markets than in these markets. Of course, as always, which market is best for you is a personal decision that should be based on your own strategy, on your financial resources, and the strength of your team in the area. So if you want to meet a great investor-friendly agent in these markets or really any market, remember to head over to BiggerPockets.com/agent to get matched for free. We will make sure to put the URL in the description below. Thank you all so much for watching. I really appreciate it. And let me know what you think about these markets. If any of you invest in these markets or considering investing in these markets, let me know what you are seeing. What are the local market conditions that you are seeing in any of these three markets or your own market? Let me know in the comments below. Thanks again. See you next week.